Under MFRS, all palm trees and fresh fruit bunches are treated differently because they have different economic purpose. All palm trees are classified as bearer plants under MFRS 116 because they are used to produce FFB over many years and are not intended for sale. Therefore, they are measured at cost less accumulated depletion and impairment losses. In contrast, FFB are biological assets under MFRS 141 because they are intended for harvest and sale. They are measured at fair value less cost to sell, and any change in fair value are recognized in profit or loss. This distinction is important because it ensures accurate asset evaluation, prevent overstatement of profit and asset, and provide a faithful representation of Company A financial position.
The CFO approach does not achieve faithful representation under the IASB conceptual framework. Firstly, the qualitative characteristics that are compromised are neutrality, completeness, and freedom from material error. The valuation is incomplete because it ignores the immature stage of the FFB, biological risk, and future costs. It is not neutral because the CFO intends to increase asset and profit to attract a strategic investor. It is also not free from material error because it assumes all immature FFB will mature and be sold at the full market price. According to MFRS 141, biological assets are measured at fair value less cost to sale. However, the fair value must reflect the asset current condition at the reporting date. Therefore, applying the full market price of harvested FFB to immature FFB is not appropriate. Secondly, the economic sustain differ from the form relied upon the CFO. Although immature FFB are biological assets under MFRS 141, they are still undergoing biological transformation and are not yet ready for harvest or sale. Therefore, they should not be valued the same as harvested FFB. Finally, a more faithful valuation should consider the current stage of maturity, biological risk, expected future costs, and use appropriate fair value adjustment rather than applying the full market price. In conclusion, the CFO valuation overstates both asset and profit and therefore does not provide a faithful representation of the company's financial position.
The ethical issues in evaluating immature fresh fruit bunches at Apex Holding Berhad. First, the ethical risk. Recording immature FFB at full market price, compromise integrity, threaten objectivity under CFO pressure, and mislead investor by overstating asset and profit. Second, the step to take. Before acting, I would check MFRS 141, guidance and document the CFO instruction, then I raise concern internally, explain the risk, and suggest proper treatment. If ignored, I escalate to the audit, commit and keep record of my objection. Finally, the professional obligation. As accountant, we must ensure the true and fair view, act in the public interest, and provide transparent reporting so external user can make informed decision. In short, our duty goes beyond an employer. It uphold ethics, protect investor, and maintain trust in financial reporting.
For the real estate and property division, the three properties are classified based on their intended use. For property 1, the corporate and retail tower is a mixed-use property. The 7 floors that are used for lease are classified as investment property under MFRS 140 before they generate rental income. The remaining 3 floors are used as a company headquarters, so they are classified as property, plant, and equipment under MFRS 116. For property 3, the Zenith condominium is classified as inventory under MFRS 102 because the units are being constructed for sales in ordinary course of business. Finally, the CFO proposal to classify all 3 properties as investment property is unreasonable because it does not reflect their actual purpose. This would overstate profit and asset, and it violates the principle of faithful representation, which requires financial information to be complete, neutral, and free from material error.
For question A, according to MFRS 137, a provision is recognized when there is a present obligation, a probable outflow of economic benefits, and the amount can be estimated reliably. For the product recall cost, Fresh State should recognize a provision. This is because the contamination and product recall create a present obligation. The company estimates that 70% of the product will be returned. which means the outflow is probable. In addition, the recall cost can be reliably estimated at 1 million ringgit, which is the best estimate according to MFRS 137. Therefore, a provision of 1 million ringgit should be recognized. However, the consumer lawsuit should not be recognized as a provision. Although there is a lawsuit, the legal advisor estimate only a 30% chance of losing the case. Since the probability is low, the outflow is only possible and not probable. Therefore, the lawsuit should not be disclosed as a contingent liability. For question B, uncertainty influence the recognition decision under MFRS 137 because it affects the probability of the outflow and the reliability of the estimate. If the outflow is probable and the amount can be measured reliably, a provision recognized. However, if the outflow is only possible, the obligation is disclosed as a contingent liability. In conclusion, fresh test should recognize 1 million ringgit provision for the product recall and disclose the consumer lawsuit as a contingent liability. Thank you.